I, of course, choose the stock of the day. And MetCash has provided an update ahead of its AGM later today. The boss, Doug Jones, says strong sales momentum has continued into the first half of fiscal 2023 across all its key business arms, supermarkets, liquor and hardware. Sales for this financial year up to August 28, up 8.9%, food sales up 4.3%. Hardware sales are the company's best performer, up almost 20%. Liquor sales up 11%. We're drowning our sorrows and doing a bit of DIY to get through the economic gloom. Let's see how the shares are performing today. And they're after being down there, just up slightly on the day. Rob, what did you think of MetCash's update and the stock at the moment? A lot of the, of course, MetCash looks after IGA hardware, but IGA supermarkets rather, supplies them, also has hardware and liquor in its portfolio.
Yeah, look, it was a pretty solid update from MetCash, and as you said, the hardware division is really driving the sales growth there. So yeah, it's very impressive. The question is it sustainable in rougher economic times? If house prices are trending down, are people going to be spending as much on their hardware going forward? You know, they'll probably dive more into liquor, I'd say, if house prices are going down. But so no, look, I was impressed by the update. MetCash has been a difficult business over the last couple of decades. If you bought the shares in 2005, you haven't made any money apart from a couple of dividends. So it's not a high return business, and that's shown in the charts over the very long term. Can they improve that going forward with the new CEO? I think he started in February, Doug. So I'm not sure, but you know, early signs are showing that liquor and hardware are potentially going to drive this business going forward.
Yeah. What about at these prices? Supermarkets, they reckon, sort of the Coles and the Woolies and MetCash are good hedges against inflation or economic downturn, more defensive stocks. You just saw on the chart MetCash near a 5-year high. What do you think of it at the moment at these levels?
I don't think it's obviously priced. It's you know, from the metrics I can see from Morningstar, it's trading at about 15 times next year's earnings, maybe a little bit lower with this latest surprise on the upside. It's quite a bit above its 5-year average in terms of price to sales, but that makes sense if they're growing faster because of hardware and liquor. I think if this was trading at single digits, I'd be somewhat interested potentially as a value play, but it's not that.
Right. Okay. So a no from you. Claude, what do you think of MetCash and the update? They did say food inflation is still biting at the moment, but they expect particularly fresh food prices to ease a bit over the next 6 or 12 months with the bumper crops coming through.
Yeah, generally speaking, this kind of business is considered a bit defensive because people need to buy food no matter what. However, I don't think that MetCash is really as well positioned in that regard as Woolworths and Coles, because even though the actual items they sell, a lot of them are sort of must-haves for most families, if you're doing your shopping at the IGA, you're probably paying a slightly higher price than at Woolworths or Coles. Now, don't get me wrong, I love to buy stuff that the local IGA that's more convenient, but I think as economic times do get tougher with interest rates going up, making people who perhaps have an onerous mortgage have to tighten the belts, I think there's some potential that they're going to shift some of that spend maybe to the bigger supermarkets. So really, it's my absolute least favorite as an investor. I think it's an important part of our society, and I like being a customer of MetCash. But yeah, I wouldn't buy shares really except in the sort of situation that Rob just talked about.